All right, let's connect with our charters. We've got Rajesh Palviya joining in on the technicals from Axis Securities, as well as Kunal Bothra right here in our studios. Good morning, gentlemen. And Kunal, let's get in a take from you. It's expiry day. Yesterday, we wrapped up the day down 1/3%. What's your assessment as to where we could be headed?
So again, I think we'll be consolidating into a tight band of 18,050, 18,450 on the index. We discussed this observation that started this week. There was a heavy amount of writing of the at the money put options, call put options for many of the large cap names, the likes of HDFC Bank, Reliance, etc. And that generally indicates that the market would remain into a band of 1% to 1.5%, especially on those large cap names, and that should get reflected on the index as well. So I think we've managed to hit both the levels. 18,050 on the Nifty, we bounced up from those levels. 18,400 approximately. Yesterday we managed to touch those levels, and we are back at the mean point of 18,200 approximately. So my sense is that closer to 18,200, which would be the pivot, that's where we would probably look into go into the expiry. And the bigger concern, which I believe could probably impact the near-term trend for the index, is the rise in dollar index. So I think till yesterday, day before, it was almost at 103, 103.5 range. Today it's hit back about that 104 mark. So till the time the dollar index continues to rise, we could probably cap the gains on the index on the upside.
Morning, Rajesh. What's your outlook on the Nifty Bank Index about this month? It's been a flattish move, a 2% upside or so. What levels are you working with?
Yeah, good morning. So Bank Nifty is struggling to cross its all-time high trajectory, and again we have seen almost 4/5 attempt failed to cross above 44,200 mark. Looking at the data setup, most of the call writers were aggressive at 44,000 strike, 44,500 strike. So these areas are likely to act as a supply zone for the Bank Nifty. If at all Bank Nifty crosses above 44,200 on a closing basis, then we can expect some short covering action, and possibly Bank Nifty can inch up further higher from the current level. But looking at the data setup, we are in the previous session we have closed almost near to its important critical support area of 43,700. So if we slips below 43,700, then possibly another 100-150 point cut we can expect in the opening itself, and then around 43,500, which is having major put concentration area, where we can find some support buying action for the Bank Nifty. As we are on expiry day, so looking at the data setup, we believe that 43,500 is likely to act as a good support area, as throughout the series the most of the put writers are writing these strikes. So we are initiating here to buy on dips kind of strategy in Bank Nifty also, because most of the banking stocks are still holding the ground. So if we get any chance to buy Bank Nifty around 43,600, it's an opportunity to buy. Keep stop loss of 43,480. And on the higher side, 43,800, 850 are likely to act as a resistance where one can book profits.
Right, okay, let's move on and let's talk stocks as well. Kunal, what's on your radar? What are you recommending?
So a couple of buy calls, large cap front. Tata Communications is something which I recommended last week as well.
Yeah, name change karo. 3 days. Change them.
It's one of the formidable names which is doing well. So why not go with the winner? So Telecom is something which looks attractive. 1,300 as a target, stop us at 1,200. And M&M is also come back into the breakout candidate list from the auto pack. The stock closed about 1250 levels yesterday on the spot basis. It's on the verge of completing an inverted head and shoulder pattern over the last 2-3 months. So that's also a buy. 1,320 as a target, stop us at 1,240.
Okay, M&M and Tata.com, those are Kunal's top recommendations. Rajesh, run us through your bets today.
So coincidentally, Tata.com is also in my list, and I'm also bullish. And looking at the setup, my target is also same. 1,300 is the immediate target for Tata Communication. Another two stocks, that is one is from FMCG, that is Dabur. Dabur is looking very attractive. In the previous session, we have seen stock closed almost near to its day high level, and looking at the recovery since last couple of trading sessions, we believe that Dabur can continue further more upside. So as market is volatile, so most of the bets are now finding the opportunity to buy some defensive category of stocks. So Dabur is one of the stock, and we believe that Dabur can scale up towards 545. So that's the target for the day, and one can keep a stop loss of 517. Another stock is from banking space, that is Bandhan Bank. Stock is enjoying for this May series, and we have seen consistent buying action throughout the series. Looking at the data setup as well as the technical setup, we believe that this stock can continue further more upside. 270, 275 could be the possible target in near term. So one can buy Bandhan Bank think with stop loss of 252 also.
Right, okay, let's get some more stock ideas, what stocks you should keep on your radar this Thursday morning, but all of that after this very quick break. Back with the market, let's get stock specific then. And fashion and beauty e-commerce platform Nykaa came out with its earnings. It was a decline in the net income for Q4, down to about 2 crore rupees from 8 crores in the previous quarter. Revenue as well saw a beating. It was down 11% on a sequential basis. Let's get in a take as to what exactly all the number crunching is, what brokerages have to say, and my colleague Vinny joins in to give us all those details. Vinny?
When you look at Nykaa's numbers, overall the first cut that we look at it in terms of revenues that were in line, but the profits and the margins of the company were below what ET was expecting. Yes, sequentially we are seeing pressure coming in on the stocks, but the company did highlight in that con call that March quarter is a seasonally weak quarter for the company compared to a December quarter, so it would be a better comparison to make it on a YOY basis as well. So sequentially, firstly, obviously yes, revenues are down by 11%, EBITDA is down by almost 10.5% as well. Margins have remained flat on a sequential basis. Year-on-year basis, when you look at it, revenues have seen a growth of 34%. Profits that have seen a decline even year-on-year basis. Profits have just come in at 2.3 crores versus 7.6 crores, which is down 70% on a year-on-year basis. Margins, slight bit of an improvement coming in terms of the margins on a year-on-year basis. Beauty personal care segment on a year-on-year basis seeing a growth of 30%. GMVs have improved by almost 29% as well. Fashion segment, the company had highlighted, that consumer trends were a bit subdued because of the demand trends, inflationary pressures, price hikes that had impacted even in terms of beauty segment as well as the fashion segment as well, which was seeing a bit of an impact coming in there. And now when you look at it, fashion segment, the contribution has started growing as well. Fashion segment now accounts to 26.4% of the revenues versus last year around 25.3% of the revenue. So all in all, yes, first cut comes in that yes, slightly below in terms of the estimates of the street as well as ET now, and on the back of that, JP Morgan maintaining an underweight rating, even Goldman Sachs maintaining a neutral rating. They've cut the target price to 175 rupees per share from previous 200 rupees per share. BofA too maintaining an underweight rating and cut the target price to 175 rupees per share from previous 200 rupees per share. Call takeaways mainly whether the fashion losses have peaked out, so keep an eye out on Nykaa.
But we will and discuss the stock as well in greater detail in light of the earnings. But now let's shift focus to Gujarat Gas, as the company has cut gas prices in the Morbi region as indicated on May 16th. What led to these price cuts? What does it mean for the company? Samit is here with all that analysis.
So if you see, remember we had indicated this on May 16 that Gujarat Gas might actually cut gas prices in the Morbi region because of lower spot LNG prices. So yesterday night the company actually has cut the gas prices by around 2.2 rupees, and this a new price of 38.4 rupees per SCM will be effective from the 1st of June. Now this price cut has happened because of lower spot LNG prices. If you see, LNG prices have dropped below the $10 per MMBTU mark. Now for the month of May, if you see, gas prices have come down by actually $2, and for every $1 drop in gas prices, the gas cost for Morbi region comes down by around 3 to 3.5 rupees per SCM. Now 38.4 rupees is the gas cost as compared to propane prices, which is the competition, and that stands at around 39 rupees, which means that gas is cheaper, and this will support the volume growth for the company. And given the fact that the company has proactively cut prices from 1st of June, it clearly shows that the management focus also remains on supporting volume growth. Now current volumes in the Morbi region stand at around 4 to 4.5 MMSCMD as against 3.5 seen in the fourth quarter, and the total volumes for the company is now at around 9.5 as against 8.9 seen in the fourth quarter. Also, do remember that the management is targeting that they would end FY24 with volumes of around 11 MMSCMD, and this cut in gas prices would certainly help the company achieve that volume target. Now also remember the fact that the company has not passed on the entire benefit of lower spot LNG prices, so there could be some upside as well on the margins front for Gujarat Gas in the financial year and the first quarter of FY24.
All right, thanks very much for giving us those details. Gujarat Gas in the spotlight, but so are financials like HDFC Bank and Aavas Financials. They held analyst meet, and the HDFC Bank management commented what the outlook is on the net interest margins post the merger with HDFC, and Aavas Financials, they spoke about AUM growth of 20 to 25% going forward. Let's understand the highlights then from these key financials. We've got Vamakshi here who joins in with the key takeaways. Vamakshi.
Well, yes, let's start off with HDFC Bank. The management highlighted that NIMs post-merger are expected to be in the range of 3.7 to 3.8%. The bank is expected to open nearly 1,500 new branches every year over the next 3 to 5 years. The branch generally achieves a break-even by almost 18 to 24 months, but the time frame is much lower in Tier 3 as well as Tier 4 branches. The bank has 8.2 crore customers, out of which the entire group, the unique customers stand at almost 10 crores. Execution risk of managing large balance sheet branches, employees, culture, etc. are some of the key factors to watch out as far as the merger is concerned. The bank is confident of achieving 1.9 to 2.1% of ROAs in FY24, and in fact they're expecting the return on equity to come down as the merger is akin to a capital raise. So that was it for HDFC Bank. But what about Aavas Financiers? Well, the focus of the analyst day was on showcasing the management breadth as well as depth. Now, the management team has been expanded quite rapidly from one CXO in 2011 to 2016 to around 10 plus CXOs from 2023 onwards. The promoters have reiterated their commitment until the management as well as the technology transition stabilizes and the business is on a strong footing. In fact, the management has guided for an AUM growth of almost 20 to 25% in the subsequent years. They believe new branches could take anywhere between 12 to 15 months to break even, and in fact 90% of the new branches that they have opened already have achieved positive ROE within the same time frame. Apart from that, they also demonstrated their progress and plans for technology transformation to achieve scale. So largely those were all the important takeaways that came in from HDFC Bank and Aavas Financiers, and on the back of that, watch out for both these counters.
Okay, and those stocks in focus. Also, Macquarie has initiated coverage in Indus Towers, and Bharti with an outperform call and maintained a neutral stance on Reliance Industries. Ashesha is here with the brokerage notes on all three stocks.
Well, yes, telecom stocks are in focus today on the back of series of brokerage notes that Macquarie has come out with. They've initiated coverage on two counters, Bharti Airtel and Indus Towers, and in Reliance Industries as well. They've gone ahead and hiked their target price. Let's talk about Bharti Airtel first, where Macquarie has initiated an outperform rating. They've given a target price of 1,000 rupees per share. They say they see Bharti Airtel as a clear winner in all Vodafone Idea survival scenarios. They believe Idea is not entering into heavy capex cycle, and group ROIC could improve from 9% to 18% by FY28. Meanwhile, on Indus Towers, they have initiated with an outperform rating. They've given a target price of 200 per share. They say that they see growth for Indus Towers to be tepid. However, dividend yield and FCF or free cash flow growth could support the stock in the medium term. Apart from this, on Reliance Industries, they are maintaining the neutral rating. They've gone ahead and hiked their target price from 2,050 rupees per share to 2,100 rupees per share. They say Jio earnings growth and ROIC will lag that of Bharti Airtel, but Jio could see leading subscriber growth. So on the back of that, they've gone ahead and increased their target price on Reliance Industries.
Okay, thanks very much for giving us all of those details, Ashesha. And moving on then, Sanjeev Puri, the Managing Director of ITC, spoke with ET Now on the sidelines of the CII event. He said that the company is seeing robust rural and economic growth post the FY23 budget. Let's listen into an excerpt.
Tourism industry is experiencing very strong demand, and we believe it will sustain. And with the thrust that the policy is providing to it, I think it augurs well for the future of this industry.
Also, budget also increased the taxes on cigarettes. So what has been the impact on demand post that?
What has happened is that the legal industry has been able to claw back from illegal industry, and therefore legal industry has gained. So this time also, I think with whatever has been done and in continuity of the stability we got last year, I think the industry is continuing to see that kind of trend of being able to claw back from illegal industry.
And my colleague Sumita Chaturvedi also caught up with Rajiv Gulabchand, chairman of Hindustan Construction Company or HCC. He says the company is working towards being sought after construction companies, and let's hear out what else he told him.
Being one of the most sought after construction company in the country.
Talking about the project Lavasa which happened, which was a long, any of the other sectors of such projects are you looking at now?
Lavasa was a project the previous government, I believe, was badly handled. It was expected to be done, but then Environment Minister at the behest of Mrs. Sonia Gandhi did stop the project. It ultimately went the way it should have gone. I wish I didn't be able to bankruptcy process has taken so long.
Alright, let's move on then from some corporate voices to what the market voices are saying, which are the top fundamental stock ideas from Rahul Shah, Motilal Oswal. Let's find out from the capital goods space.
When we talk about the capital goods sector, I think select few large names are available, and I think they usually traded always on expansion. So we've never got a cheaper valuation. So if we have to select, we have to get into names like Siemens or LNT or Cummins on that matter. And I think when we talk about select stocks copied from here, I think all the three looks very interesting from my perspective. Obviously, Siemens have cooled down from the recent heights and all. Obviously, that looks interesting. Cummins remains our bets for investments. And thirdly, I think LNT, I think you get a full-fledged investment. I think LNT also offers well. So I think I would advise, I think the trends have been positive. We have seen the things coming back in the capital goods space. So I would advise buying all the three stocks for the portfolio.
Okay, stocks and more stocks in our radar. So let's discuss all of these. We have with us Sanjeev Bhasin from IIFL joining in on the show right now. Sanjeev, hi, good morning. Great to have you in ET Now as always. Sanjeev, can't help but first talk about Nykaa, because while many brokerages believe that the stock has been a rank underperformer, they see significant upside. The beauty and personal care segment has been a bit of a consistent profitable growth driver, not so much fashion, but wanted to understand from you, what's the street verdict?
Yeah, good morning, Aisha. Good to be with you after a long time. So, I don't track Nykaa as much, but if I read the headlines, a company like Purple, which is into Glamour World, which is into, Priyanka Gill, all these are doing extremely well. And, if we see the personal care and the beauty segment, it has miles to go, Aisha, in our country, because we are just coming of age, and I think that the spending patterns have changed. So we have two picks in our portfolio in the fintech stroke new listed stocks, that's Zomato and Paytm. Nykaa is something which we've been tracking, and we will get back after we analyze these numbers. But personally, I don't track it. I'm just giving you a view of the industry.
Point. Zomato and Paytm. Sanjeev, give us the rationale on why you're bullish on these stocks and why they continue to be on the buy for you.
So simply, my son runs a restaurant. I've always invited you for best butter chicken, but 30% of his margins are taken by Zomato. Zomato is a no-brainer as far as the restaurant goes. It keeps your kitchen alive. Secondly, they're now outreaching a lot of the reaches where margins may fall, but the breadth and the volumes will pick up. So I think if you have a 2-year perspective, you can easily see your money double. Same is with Paytm. The investment officer met me a couple of months back, and that was closer to 600. He said, not recommending the stock, he said India is now doing 4 times more digital transactions than China, and China was the front leader at one time. And he says QR is a no-brainer. They've invested a lot in technology, and they think that the reach to vendors and the small ticket buyers of kiranas, that is where their money lies. So they have an NBFC or a financial arm in the offing. I think that once they get approval, this stock can be a huge outperformer.
Sanjeev, I promise you our next Delhi trip, I will definitely be at the restaurant for butter chicken, and I will not Zomato it. We'll personally go there, right?
I'm a vegetarian.
I mean, we follow whatever.
So for vegetarians, we have very good dahi tikka kebab and paneer tikka.
So, has your son started putting
the options on ONDC? I mean, wouldn't that just change the construct of Zomato?
Yes, Nikunj is waiting for more clarity. He will get there because he keeps crying about the margins. But right now, I am on the lookout for a good girl and he's on the way to get engaged. So the restaurant will come little later. But yes, ONDC is on the cards.
Congratulations. आप ससुर बनने वाले हो? No, Bachin Saab, I'm saying your son is getting engaged, so congratulations on that.
Thank you. It's on the anvil. Let's see who he finalizes, but it's on the anvil.
Okay. I think marriage has to be done between two people, right? Both of them have to agree. Okay, Bachin Saab, all the best. Keep us posted.
First find someone.
Okay, find someone. Yeah. Okay, I'm my bad. Okay, Bachin Saab, all the best. Congratulations. हम मिठाई का जल्दी वेट करेंगे.
जरूर sir.
Okay, I will change gears, Bachin Saab, and talk about what is happening in the electronic manufacturing space. In last 10 days, Keynes, Sharma SGX, Dixon, Amber, all of them have made a roaring comeback. So if somebody is buying electronic manufacturing stocks now, what does next 6 months and what does next 1 year hold for them?
Nikunj, you can't run with the hares and hunt with the hounds. ये कहना आसान था 16,800 आ गया हम लेंगे. आप अगर मार्केट में थे तभी आप न्यू हाइज देखोगे और चाहे वो डिक्सन टेक्नोलॉजीज हो, केन्स हो, चाहे वो कमिंस हो, सीमेंस हो, L&T, they are coming with best ever results. Look at Maruti sales, the stock is hitting new highs. So we are missing the woods for the trees. Corporate results have been better than expected. Macros for once are at the best time. Bond yields, rupee, oil, all in your favor. So and the most unwanted players are the biggest buyers. So the new highs are coming, whether you own Amber or you own Dixon, I don't know. But your portfolio must be in stocks. If you own stocks, then only you will enjoy the 19,000 which is going to come.
I understand that, but I was specific about this space which is getting charged up. Everyone is saying that what happens to, let's say, defense stocks 2 years ago and railway stocks 1 year ago, this year belongs to some of the electronic manufacturing companies.
Correct. I fully agree. Just look at Nvidia's numbers today. It's up 15% aftermarket because it has guided higher on chips. And that tells you that the last 1 year saw a lot of shortage on a lot of things. That is coming to hem and the logistics is working. And these people are ruling the roost, whether it's artificial intelligence or the new regime. But electronics is a very sweet spot. Even electric appliances. Look at Havells, look at Voltas. I mean, and I can just give you the ancillary industries which are doing extremely well and where these are going to be part and parcel for the next few years.
I'm scanning through some more stocks here, and one more stock I think which we've discussed, and markets did not pay attention to this, is IndusInd Bank. There was a time it was commanding price to book which was equivalent to HDFC Bank. Today it is commanding a price to book which is just below SBI. What is the right price for IndusInd Bank?
So I, as a disclosure, I have it in my personal portfolio, and when the real, there was blood on the streets at 350 and nobody wanted to touch it, that's it. Now, IndusInd is the parent holding company by the Hindujas. Ashok Leyland is seeing the strongest numbers. In the two-wheeler, in the four-wheeler segment and the CV, they are seeing record businesses. And if orders are going to spurt, then IndusInd is a natural proxy. They've cleansed their book well. Sumant Katpalia has taken the helm at the and I think that Bank Nifty is being led higher by all the banks which were not, not the favorites. AU Bank, Bandhan Bank, and IndusInd. Now, HDFC, if I heard the management and I'm waiting for the merger, I think it's a no-brainer to own HDFC Bank. Return on capital, return on equity is very strong. Branch expansion. So I think this is the time to own both IndusInd and HDFC.
See, that's what Sanjeev is flagging off. But let's get in a take on the charts as well then. And Rajesh, getting your thoughts on some of the stocks that have been in the spotlight. Just a quick look as to what the charts of an NBCC are indicating.
So stock has given a breakout on a weekly chart, and looking at the overall setup, we believe that if the stocks manage to cross 44-45 level, then NBCC can scale up further higher from the current level. As looking at the longer term time frame. After a consolidation of almost 6-7 months, now stock is breaking out on the near term chart. So 45 is the key level to watch for. If it crosses those levels, then next target could be around 54 to 56 in the short to medium term. One can buy this stock with stop loss of 41.
The other group of stocks I want to focus is definitely the entire railways theme, and I'm just going to get in Sanjeev's take over here. Titagarh Wagons came out with their numbers, and it's a blowout set. The loss that they actually posted has turned into a profit this quarter of about 48 crore rupees. They've expanded more than 100 basis points on a year-on-year basis on their margins, and we've seen the reportage come in from most of these railway companies as well. It's been a bit of a mixed bag, frankly. But Sanjeev, the market is now very divided on how to approach railway stocks and whether they were a fancied frenzy with the best behind us.
Well, Aisha, I've been in the markets for fairly long, and railway stocks were always few weeks before the rail budgets, and then they tended to die down. But look at the performance of RVNL or an Ircon or a Titagarh Wagon. It's telling you that the capex and the intensity with which the government is focusing on rail and in-road transport is humongous. That's why these companies' margins and their maybe the best ever in history. And I think they've run up a lot, so they've doubled, triple in the last 2 years. They can be caution and because they're overowned. But as a theme, that's what we are trying to tell you, that the economy is going all guns blazing. When did you see Siemens, Thermax, L&T hit all-time highs? So I am very, very positive on the overall market. Now, obviously, Aisha, Titagarh and RVNL have been huge doublers from recent times, and there will be profit booking and questions on the numbers. Generally, the adage is sell on good news and buy on bad news, which is why we are turning contrarian and buying some of the metal stocks, which we think in the next 3 months will be outperformers.
Okay. Could you name any of the metal names that you're bullish on and recommend a buy?
So simply put, we think copper may have come to close to bottoming out. We think next week, the dumbass deal on the debt ceiling, which has happened 68 times out of 80 years, is going to get through, and that is always going to be a cause of concern. I mean, why not have a budget and clear the balances? But, you will live with the US and how their whims and fancies go. Once that is done, the dollar is headed lower. Jindal Steel becomes an extremely good attractive buy at this price along with Tata Steel. And in copper, I think Hindalco and the best numbers were of Hindustan Copper. I think if you have a 3-month period, these stocks can give you a 20% return as both ferrous, non-ferrous come back on the table with China spending and the underperformance coming to an end.
Jeffrey's forum, a note on IHCL. It's almost like a routine that every day we get a buy on IHCL from some brokerage or the other brokerage. By the way, Nuresh is not there, Kunal. Nuresh has turned bearish on IHCL.
Yeah,
he's like the biggest bull.
He's
the biggest karma bull of IHCL is saying time to get out.
Yeah.
Why? Technically, is it looking overbought?
Well, not, on the charts, it's not looking overbought. In fact, the stock is doing pretty well in the last 1 month, 2 months as well. The stock has recovered quite smartly from, I think, 340 levels, 340, 345 to now, I think, 375 plus, where it's trading. It's also on the verge of hitting a lifetime high. So the momentum is strong. It's more stable as a chart. Even at a time when the stock hit that 340 odd levels, it actually bounced off from its key 20-day moving average. So when a stock typically shows those tendency of adhering towards its 20 DMA over a gradual period of uptrend, we expect that the trend would continue to be more sustainable. So I think for Indian hotels, as of now, looking at the charts, it seems that the trend is sustainable. 340 remains to be a key support point for the stock over the near term.
Sanjeev, where does your preference lie when it comes to the auto space?
So firstly, you are all welcome when you come to Delhi. Along with the restaurant, we'll also take you to Taj Vivanta, which is a stone's throw from my house. And it belongs to my cousin, run by the Taj franchise. They are seeing the best EBITDA break-even in the last 10 years. I'm just giving you a fact. It is not something as a disclosure. But you will be amazed at the turn in room rates and how Taj has become the most wanted brand. And Mr. Chatwal stated that if I wish I had 2-3 more branches in Delhi and Bombay, because business is roaring. That's to tell you the outperformance. The stock has almost doubled or tripled in the last 3 years. On auto, I am very bullish on Maruti, and I'm extremely positive on some of the OEMs like Bosch, which has been a big outperformer. But Maruti, Hero Moto is my dark horse. You know what Tata Motor has done in the last 6 months. I think that this year will belong to Hero Moto, given that rural incomes and two-wheelers are seeing a lot of traction. Out of every four motorcycles charged on EVs, three are Hero Moto, and it's not a very well known fact. So they are gaining market share in EV, which is a small segment in the two-wheeler, but this stock can be a dark horse along with Maruti.
So Aisha, Nikunj, now when you guys head to Delhi for IEC, you have so many options as well and to go for. But that aside, let's thank Rajesh for joining in on the technicals. We've got Shivangi Salda as well with us now on the show.